How's it going, everyone? It's Sam. We just got some blowout numbers from Coinbase, really exceeding, I think, just about everyone's expectations. The stock's down a little bit. I want to talk about this because it's really important for crypto investors to realize what's happening with Coinbase, realize what game they're playing, who is buying, who is selling, what kind of revenues is Coinbase seeing right now, what kind of outlook are they giving on the crypto market. And they do that in their shareholder report. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this as soon as I make them. Also, a couple links underneath the video. One is to Margex. In case you want to trade cryptocurrency using leverage, you can do it over on Margex. And there's also going to be a link to CoinW underneath the video as well, where you can trade with leverage, or you can just trade spot. You can just buy spot Bitcoin and hold it. And I have I think a banger of a video coming out explaining why you want to have some Bitcoin. So be on the lookout for that. But let's take a look at Coinbase. So Coinbase just reported earnings, and it's kind of overshadowed because Apple has earnings here today, but they're down 2.6% after the market closed. A lot of people would say, oh, they must have had pretty bad earnings. No, they blew out expectations. They're going to have their earnings call in about an hour from the time of this recording, but let's take a look at what they said. So every quarter, I love looking at this because they give out so much information. And I do want to apologize. I'm on my phone because I just got a new laptop and my old laptop is transferring files. So we're working with the phone here today. But they say our financial performance in Q1 reflects our focused execution on product expansion, ongoing operational discipline, and strong crypto market conditions. Let's first of all look at what their expectations were. So people expected, or analysts expected, about 1.37 billion in revenue. And I've seen different estimates from 1.07 to 1.28 in terms of EPS. They blew these out. They had 1.6 billion in revenue and $4 in EPS. So they beat by 200%, 300%, something like that, something insane. They say that they generated 1.6 billion in total revenue and 1.2 billion of net income. I mean, think about those numbers. 75% of the money that they brought in went to the bottom line in net income. Adjusted EBITDA was $1 billion more than we generated in all of 2023. Additionally, we made meaningful progress against our 2024 priorities of driving revenue, utility, and regulatory clarity. Our market share in U.S. spot and derivatives increased. We reached all-time highs on Coinbase Prime, and USDC market capitalization increased. Coinbase One adoption remained strong, and our international business was a larger contributor to our growth. Through Base, our layer 2 solution, and we'll get to the juicy stuff here in a second. The juicy stuff is coming. They say through Base, our layer 2 solution, we are expanding the utility of crypto by improving the infrastructure of the ecosystem, increasing speed and stability of the network, and empowering builders to innovate on-chain. Lastly, we continue to drive regulatory clarity for crypto investments through grassroots advocacy, pushing for legislation and ongoing efforts to seek clarity through the courts. Okay, so let's break some of these numbers down. 1.6 billion in revenue, beating estimates by well over 10%. Net income was 300% higher than expectations too. They show USDC increasing the market cap by 30%, growing internationally, 80% coverage of the estimated total perpetual futures volume globally as of Q1. Okay, let's go through some of the numbers though, because that was a lot of just verbiage from them. So their total net revenue for this quarter was about $1.58 billion, $1.59 billion. This is up from $900 million last quarter. I mean, we're talking about an 80% increase from last quarter. From a year ago, it's up over 100%. let's see, this is their net income, went from 273 million up to 1.17 billion. So their net income went up 4x. And then adjusted EBITDA went up from 324 up to 1.01 billion. Okay, let's just take a second. Those are insane numbers. Obviously, it's coming down to a lot of people trading more. And we can see that down here. Let's just go down so you can see we had transaction revenue from consumers, or just like retail, go up to $935 million. So still over half of their revenue is coming from retail trading. Then we had about 85 million in revenue coming from institutions trading. Keep in mind that they will break down how much institutions trade versus retail. They're making a lot of money from retail traders. They charge a lot higher fees. Other transaction revenue ended up being about 56 million, so actually being a significant contributor this quarter, almost as much as institutional revenue. They also had a good amount of subscription revenue. You can see about 511 million, most of which is coming from stablecoin revenue and blockchain rewards. So this is subscription and services revenue. Okay, let's scroll down. You can see their trading volume. So this is the crazy thing. We have consumers paying about 10 times the fees, retail paying about 10 times the fees, and yet they do 1/5 of the volume. Retail did about 56 billion in volume, or in trading volume. Institutions did about 256 billion. So, I mean, the fees are about 50x higher. You can just break down the numbers, 50x higher for retail. That is crazy. But still, their business is doing well. Trading volume, the majority is coming from Bitcoin, about 33%, and 13% from Ethereum, 11% from USDT, and then the rest is just other crypto assets, about 43%. Transaction revenue, as a percentage of the total, works out to be about the same, except for the fact that, these smaller altcoins, whatever they are, these smaller crypto assets are paying a higher percentage. They're making more on selling those smaller cryptos as opposed to Bitcoin or Ethereum. Okay, operating expenses actually kept pretty low. So they go through it at some point in here. Yeah, you can see here, 877 million in total operating expenses versus 838 million the quarter before. They say the majority of this was due to, I believe, stock-based compensation. So they are keeping expenses in line as well. Okay, I think that's pretty much what I want to cover here. Of course, you can dig into it a little bit deeper, but they are expecting a similar revenue number next quarter. They say, though, that it's not always the best to try to extrapolate this out to the next quarter for them. Okay, sorry, we're back now. They say that it can be dangerous to try to expand this out because we basically don't know what trading volumes are going to be moving forward. So, what does this mean for you as a crypto investor? It means that we are in a bull market. I mean, we can see it. We can see Coinbase's revenue going up. We can see more people trading. We can see institutions trading, retail trading. We can see services revenue going up. And, we see the day-to-day fluctuations, right, in the prices of cryptocurrencies. And sometimes it throws us off. It makes us feel like the bull run's over. But you can see when you expand out to a full quarter, this quarter was so much better than the quarter before, which was so much better than the quarter before that, and that was better than the quarter before that. Looking at companies like this, it shows us, shows us that we are paying higher fees. We are getting the workaround. I don't know the best way to phrase that. We are, as retail investors, paying a lot. So you have to be careful of that. You have to be careful of what you're buying, what kind of fees you're buying. But also it tells us we are in that bull market that we've been waiting for. And just because we're down 10, 20% doesn't mean that the bull market's over, right? You can see it in the numbers. This is just starting to pick back up. I mean, the numbers are crazy. And the profitability of some of these crypto companies is crazy. And I think, some people would be annoyed that the fees are kind of high. And, yeah, it sucks, right? If you're paying high fees, you have to be careful about that. But crypto companies making a lot of money does not suck. That actually helps us out as an industry a lot. Where would we be if Binance and Coinbase and none of these companies had any money? Well, we would be pushed around all over the place. Money begets money. Money pushes change. And these companies want crypto to stay, so they're going to fight to make sure that we can do what we want to do, staking, self-custody. They want to make sure that we can trade freely, right? So they're going to fight the SEC. They're going to continue to push for us to be able to do what we want to do, because we'll do it on their platforms and make them some money in the meantime. So our interests are aligned. So make sure that you're thinking big picture here. Now, thank you so much for watching. Again, you can check out the links underneath the video to CoinW or to Blowfin or to Margex if you want to start trading. The reason I bring those up too in a video about Coinbase is great for some things, but we've seen them go down several times, and there's some certain things you just can't do on Coinbase. There's certain coins you can't buy, right? So if you want a little bit more flexibility, get a second account somewhere else, like Blowfin, Margex, CoinW, and you can start trading there today. Thank you so much. I appreciate it. Let me know your thoughts on this underneath the video, and I'll see you in the next one. Bye.